S&P touching fresh all-time highs and Asian markets in tow to some extent. Good day it looks like. A good day for us. We have a guest editor.
Oh yes, we do. So we'll get lots of insights from him, from Ridhan Desai, the MD of Morgan Stanley, who joins in today as guest editor. But Latha, what are the cues? As you pointed out, global cues are looking good. The US bond yields have softened a tad bit.
No, I think we must get this in perspective. The gyration we saw was April 20th, 1.89 on the US yields, and last Tuesday it was 2.36. Now that was the volatility that brought jitters across the world, because that is the safest default free risk-free rate. It's not market risk-free, but it is the default free rate. If that rises to 2.37, people want to take off money from other assets. Now, with that settling down at 2.23 yesterday, that's a good 13 basis points lower than the Tuesday high. So it just looks like that wild swing is over for now. It looks like. You perhaps have to watch it for a week to get the confidence that there won't be another aftershock. But it looks like this seismic minor seismic quake in the bond markets is over. Even the German bonds have moved down from 0.72 yesterday to 0.7. So overall yields appear to be cooling. So people will not be in a hurry to take out money from other risk assets. And you could see that in the Indian market as well. The FII selling is now absolutely plateauing, teetering down to what, 70 crores, next to nothing really. That, I think, is making the global scene for now look like it has settled down. Indian positive cues for me were the jubilant numbers. Already Sonia was giving us good news in terms of April car sales. Now we realize that even in the 3 months prior to that, Indians ate more pizzas. So it does look like the urban demand is finally reviving.
Alright, so those are some positive cues. But Anuj, morning, what's the sense you're getting about the index itself? You think this volatility will continue?
Morning, Sonia. I think that's the key. The volatility is likely to continue, but how do you make money in volatility? I think that the India VIX is at the cusp of a breakout. There are 2 or 3 positive cues at this point in time. While the market is in this 8,000 to 8350 range, you're not seeing any kind of delivery-based buying, but you're also not seeing any major delivery-based selling, except for a stock like Lupin. Lupin for the last 2 days has seen delivery-based selling. And I think apart from the point that Latha mentioned about Jubilant Foodworks, I think that's going to be one of the most important cues this morning. When a consumption stock does so well, you have to sit up and take notice of that. But I think the other significant part is that in the near term, how do you sense the market? You sense the market by asking yourself, are you making more money by buying the dips, or are you making more money by selling the rallies? Just in the near term, you're making more money by buying the dips than selling the rally. That, I think, is a bit of a positive cue. And look, while we are all consumed by what's happening to the Nifty, take a look at the broader market. I'm not getting into small caps or mid caps. The Nifty Junior is within 3% of a lifetime high. Very, quickly and, in a remarkable resilience, it's moved up to within 3% of new life high. Even the mid cap index is within 6% of new life high. So at the end of the day, the portfolios took a bit of a damage, and now, you've seen if someone would have accumulated at lower levels, you would be break even or you would be making money. Yeah. And it's been that kind of a market. It will correct on the index level, but on individual stock specific level, a lot of stocks will immediately go back to lifetime highs because they are strong stocks. And if the earnings haven't disappointed, they'll go back to all-time highs. So the Nifty is still 10% off life highs, and that's because a lot of individual sector stocks have their own problems, and that's why the Nifty is not able to move up, but the broader market has moved on. So I think that's positive. The only reason, and I want to add a bit of caution here, why I'm getting a bit worried is what's happening with the FII data in the F&O market. Yesterday as well, there was quite a bit of selling in index futures. I was just looking at the numbers in terms of what took place. There was quite a bit of short build-up that took place in index futures. And you saw that in the sell number in index futures, 1,600 crores. Apart from that, there was selling in index options as well, in the sense that the long calls were unbound and long puts were added. So puts were bought and calls were, unbound. So that's also a bit of a negative, that the volatility may not be done yet. And this India VIX is a bit uncomfortable at 21. It really needs to go back to 14 or 15 for the bulls. At 21, if it breaks out, goes to even 25, 26, the market goes lower. But as of now, the thesis for this market is very simple. The market has made a panic bottom at around 8,000, and is ready to move on. Unless something drastic happens, now we've seen the worst of earnings as well. For example, unless State Bank of India really disappoints with really ugly numbers, unless that happens, 8,000 should hold as a sacrosanct bottom, and the market may be ready to move on, at least for individual stocks. That's the sense you get.
All right, well, we'll talk about all this and more through the course of the show. We have lots of interesting discussions lined up. But first up, our guest editor for today is Ridhim Desai, the MD of Morgan Stanley. So that's the big guest that we have on our show. He joins in at